Yes, ma'am.
Yeah. Hello, friends. I welcome you all to today's CP study circle. Friends, we had our budget finance bill proposals presented by Finance Secretary Nirmala Sitharaman on 1st February. She has presented many proposals, majorly in relation to customs and certain in relation to GST as well. So we are here today to discuss about those proposals. We have a learned speaker, a master on this subject, Jayesh Bhai Gogri, with us, who will be taking us with the proposals. Uh, he'll be covering majorly GST proposals, and we'll be having a look onto custom proposals as well. Brief overview on custom proposals. So, without wasting much time, I'll just request Pareen Gala to play the ICI Momento, ICI motto. Pareen?
No need to rise.
Yeah.
No,
That's
that's
fine.
okay. That's okay.
येष सुप्तेषु जाग्रति येष सुप्तेषु जाग्रति कामं 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 कामंशो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तदेव शुक्रदब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
So, yeah, before we proceed, I'll just request Amit Chheda to present online Momento, co-speaker.
Thank you, Mehul. I would request Parin to please share the e-certificate. Jayesh bhai, we have really difficult time right now. Everybody knows that, and please accept this e-certificate on behalf of other CP study
Thank
center.
you.
Hopefully, we will meet once, and we will have a chance to hear you in person also.
Sure.
Please accept this time on an online motto.
Sure.
Thank you so much. Over to you.
Now, yeah, before I hand over to Jayesh bhai, I'll request Deep Chheda, committee member, to introduce today's speaker. Jayesh bhai.
Good evening, everybody, and the other is CP Study Circle heartily welcomes CA Jayesh Gogri. Jayesh bhai is an authority in indirect tax who absolutely needs no introduction, and today such is his goodwill that everyone has come here just to listen to him on a virtual platform. And like Amit bhai rightly said, we are waiting for you, sir, that we can someday meet you and attend a physical seminar with you. Jayesh bhai has been very active chartered accountant for the past 2 decades. He has been practicing, and he's been practicing in the niche areas of taxation, customs, FTP, and real estate laws. He's also a promoter of GSC Cross Border Solutions Private Limited, where he's providing various services to domestic and international clients in the arena of finance, setup advisory, and cost optimization. Other than that, he has made several contributions to the profession of CA, among which the notable ones are that he has been a special invitee to the ICAI IDT committee from 2016 to 2018. He has authored a book on GST and anti-profiteering, and he has delivered lectures to more than 1 lakh persons across India at 100 plus forums at prestigious institutions like IIM, ICAI, CBIC, ICSI, trade, industry, and other professional associations. On the social front, Jayesh bhai is a core committee member of the Jain Youth Forum and he has been delivering talks on Jainism and self-development. Jayesh bhai, once again, Dadari CP Study Circle is very honored to have you amongst us
Thank
today.
you.
And we are very much looking forward to learning from you and understanding the nitty-gritties of the budget from you today. Thank you, Jayesh bhai.
Thank you.
Jayesh bhai, the floor is yours.
Thank you, Deep Bhai, for kind words of introduction. Really thankful to Dadari CP Study Circle for giving me this opportunity to share my thoughts on budget 2022. I respected the past presidents, the committee members, and also the participants. So we'll take up budget related things, and mainly we'll talk about certain customs related things first, and then we can look forward to GST. Is this screen visible to all of you?
Yes, very much. We can be. Yeah.
Okay, thank you. So briefly, I'll touch upon customs, because I understand that there are not many who are practicing in customs, but since it's like a specific, I would say, session on indirect taxes, so let's have a little bit of glimpse of the customs related provisions, and then we can move on to the detailed analysis of GST provisions. Now, friends, certain provisions are also relevant from the GST perspective. Now, though they are like actually in customs, but I would say it has got some connection with the GST provisions. Now, recently we had a particular case which is being like discussed at the Supreme Court level. The issue was this, that whether a DRI, which is a DGGI in the GST, so we have got DRI, Direct Revenue Intelligence, in the customs. So they have caught certain cases of a particular entity, and then they try to verify, and then they try to levy the additional custom duties, alleging some evasion or whatever. Now, of course, there are like other merits which were being discussed, but then the main important ground was this, that already certain things were checked by departmental authorities, maybe at the stage of importation. Normally what happens that when the import takes place, there are a team of appraisers who checks your bill of entry. Of course, it's a self-assessment nowadays, but wherever like they have got certain doubts or whatever, they will check the appraisers will check the things, and then if they found it proper, they will allow you to release the goods on payment of duty. Thereafter, there are like certain provisions of audits also, that some audit departmental people will come down to your place and they will carry out the departmental audit, and then they will check whether there are any compliances or otherwise. Now, DRI is one more, I would say, team to check certain specific issue-based kind of scenarios, where they are aware of that this is happening, this is prevalent across the industry, and there are like huge amounts involved. So then DRI people also can come down. They come down and verify. See, in this case, what had happened, that already the assessment had happened, the appraisers had checked and they had imported, and later on, this DRI authorities came up. Now, the issue which was raised before the Supreme Court was this, that since already one officer has examined my case, is it open that for infinite period, I'll keep answering to various authorities which keep coming to my premises? See, you would realize that in GST also, you have got first of all scrutiny of returns, then the state authorities, then the central government authorities, then the anti-evasion, then you have got DGGI and whatnot, then also audit. So is it necessary that for the same period, for the same transaction, same SSC, will he be keep answering, keep attending all this kind of variety of unwanted guests which visit their places? That was the precise question which was put before the court. And the court, the way he interpreted, it went down to the grammar also, that ultimately the words which were used was the proper officer can verify the things, or he can investigate. The court interpreted word the in a specific way, that there are three articles in grammar, a and the. So the word which has been used before the proper officer is the. The means the same officer which has already carried out your original assessment. Only that officer can re-verify. Otherwise, there is no possibility that reassessment can be done by somebody else. Okay. So it is the same office. Say, for example, it was the appraiser, may not be Mr. X or Y or Z, but the proper officer only can recheck. The appraiser only can recheck. Now, in this case, DRI was rechecking, and rather they were trying to pass some order also. They went ahead with the SOCOS notice and also levied some additional duties. They collected additional duties and penalties. The question was, are they in a capacity to pass this kind of adjudication orders? And court held, no, they don't have any powers. Ultimately, it is the original assessment officer only can reassess his own case. Now, in the context of that, maybe here people at the GST authorities, GST practitioners also, they try to take shelter of this kind of judgment, and they challenge various DGGI actions. In that context, this clause 86 of Finance Bill 2022 has tried to overcome this kind of issue. They are trying to classify, okay, who are the proper officer, and then they are trying to say that Principal Chief of Commissioner, which is into preventives, then the Director General of Revenue Intelligence, that is DRI, and all these people, etc., would be also considered to be the proper officer. Okay, so they are trying to amend the provisions to say that these are the officers of customs. Okay, they can very well check and verify. So earlier it was only Principal Chief Commissioner. Now it is the Principal Chief Commissioner of Customs Preventive also. Earlier it was only Chief Commissioner. Now it is Preventive as well as DRI both, and so forth. Even the audit person has been added and all those things. So you can understand that they are trying to overcome the judgment which I have highlighted here. It's Canon India Private Limited 3TMI 384. So that is Supreme Court judgment. They are trying to bypass or overcome the effect of that judgment. And at certain places, they have added other powers also, that whatever actions were taken in the past, okay, they'll be considered to be valid, irrespective of whatever is contained in any decree, court, judgment, etc., etc. Okay, so they are even trying to overcome Canon India itself, that if at all we have taken certain actions without amending this, even then, ultimately, all those actions should be considered to be valid. They are trying to validate through this finance bill. So this is like one of the amendment which they are trying to come. Now the good part of this particular case is this, that ultimately whatever amount of rectifications they are trying to do, okay, they have done it only in the customs law. I would say that ratio which is laid down by the Supreme Court in Canon India still survives in the GST law, because in the GST law there is no similar kind of amendment. It's not that, I hope nobody is from the department, so I'm not hinting them that okay, you carry out some amendment in GST law also, but luckily they have not carried out any kind of amendment in the GST law. So one can still take the shelter of this Canon India in the GST kind of cases, particularly DGGI cases. Now they are trying to rather it's like they are trying to give certain powers to these proper officers, and they are like saying that we will be in a position, the central government will have the powers to define the jurisdiction on the basis of either the territory, maybe, or the class of persons, or the specific goods, or specific service, specific class of goods, or maybe some random assignment also one can do it. Okay, and then they are taking one more power, that okay, CBIC can issue other further criterion also. There could be some other criterion based on which the jurisdiction of a person or a particular officer can be decided. So one can understand that they are, in a way, though it appears that they are trying to limit the jurisdiction of the officers, but in a way they are trying to take those powers that we will let you know that who is having which jurisdiction. The SSA is nobody to let us know that, okay, this person cannot come to my place, he is not having jurisdiction. We will let you know whether he has got jurisdiction or not. Okay, that's the kind of thing which they are trying to come up with. Then there can be like 2 or more officers who can have concurrent powers to perform functions. Again, you can understand that when you challenge that, abhi just CGST officer aake gaya, what is this SGST officer doing over here? Same case, already it's over, it has been already examined. Then they are trying to say, of course, it is not the GST scenario, it is the customs which they are trying to come up with some amendment. They are saying that 2 officers or even more officers can have simultaneous jurisdiction. So though you are one, but you can be surrounded by 20 people. If they empower them, they can check your transactions. So this is again, I would say, not in a good direction. We are moving to the in a backward scene where, you know, the typically we had all this Inspector Raj and the red tapist environment. I think this is not at all in the direction of ease of doing business. For the undervaluation, they said that like they will be specifying certain additional obligations. They can come up with some additional angles to be looked at, and then again board can specify what could be those angles and how the actual undervaluation will be rechecked, or it will be like it will have to pass through some test. So they are also going to issue some more directions. Ultimately, what they have done is just took the powers under the law, and then they'll keep notifying or maybe like keep circulating by way of circulars. There's some changes pertaining to advanced ruling. First of all, now the advanced rulings will have the validity of 3 years, okay, maximum. And these 3 years can be like further curtailed if there is some change in law or maybe some change in fact. Of course, as far as the change in law or fact was concerned, even prior to this amendment, the advanced ruling was getting ineffective. Now, as far as this, the time limit, upper time limit concerned, once you had taken the advanced ruling, it was valid for infinite period, unless there is some change in law or fact. Now they are saying, oh, irrespective of that, there is time limit of 3 years. Beyond that, again, you come back. Okay. So maybe the work of officers, it should not be like one time. You should have the regular kind of visits and relationship with them. Same with the professionals who are like handling the special valuation branch cases, etc. So it's like now a regular affair, not unlike in the past that like it was once taken, it was all for ever. Then the earlier there was some time limit for withdrawing your advance ruling. So say for example, within 30 days, you can withdraw. But now they say that anytime before the advance ruling has been delivered, if you feel that it's not going to come in your favor, if at all your hearings with the advance ruling authorities have not gone well, you can even come out of that. Okay, you can just withdraw. Some fees also they may charge. Period I have talked about. As I said, friends, like I will not be dealing in this finance proposals quite in detail. Okay, so we can't deal with this customs provisions very much in detail unless you have got some specific point where you want me to deliberate. We can take up those cases. Otherwise, we can just have a glance. Yeah. Now there is like one more section 110 AA, which they are trying to amend. And why I'm saying all these provisions, that it has got some connection. You can have some inference to the GST law also, that wherever the government needed, they have made some specific changes in a particular law. If they have not chosen to make those kind of amendments in the GST law, that means they don't want to disturb the GST law. Okay. So what is the provision here? In a way, it's a good provision. which may be like, again, it's good for customs law. But then for GST, we don't have this kind of provision. What they're trying to say, let's say, for example, if there is some investigation authority or the inquiring authority or maybe auditing authority, based on whatever results, what they can do is maximum they can pass it on to the proper officer. They themselves cannot sit into the chair of the adjudicating authority, keep issuing SOCOS notices and then adjudicating those cases. They'll have to pass on whatever findings they have. Ultimately, they'll have to give it to the proper officer, who are the jurisdiction officers, appraisers, and they will carry out the further process. So otherwise, normally you would know that DRI authorities, once they catch hold of you, they will ask you to pay upfront. Without even completing their investigation, they will keep insisting that you pay it upfront. Otherwise, we won't leave you. But now one can say that, okay, whatever findings you have, but you complete your findings, investigation, and then you transfer this file to the adjudicating authority. We will discuss the matter with them. And you know that as compared to the DRI authorities, adjudicating authorities are much better people to deal with, normally. Protection of data. This is very important kind of provision, and you may be surprised that how it can change the entire business scenario. I was talking to a gentleman, quite a prominent, I would say, professional, chartered accountant, and he helps people set up their business entities in UAE. And then I was asking, I mean, just we had a round of discussion, that why people would come to you and ask you to, because he is operating from India. And then why Indian entities would come and tell you that, okay, we want to set up a business in UAE. So, of course, if they have got some business operation in UAE, it makes sense that, okay, they'll have to go there and establish themselves. One of the important points which he highlighted, let's say, for example, if you directly export from here, and say, for example, if you're a merchant exporter, normally you are supposed to give all your documents to your supplier, that within 3 months I have exported, to prove that you have to give all the documents. That supplier would immediately come to know that who is your ultimate buyer. Okay, that is one chance. Secondly, say, for example, even if you are buying upfront from them, okay, and then you are exporting on your own, still these people can approach the custom authorities or somebody who can leak some data, and then it's very easy to make out that who is the actual buyer. So he says that to avoid those kind of situations, to save the business, it is sensible enough to establish ourselves in UAE. So you export to your UAE unit, and that UAE unit will actually export to further actual buyer. And he says that UAE authorities are not so cheap that they will shell out the data easily. And therefore, your buyers, your suppliers wouldn't come to know that who are your actual buyers. So that itself, that simple fact that because our data with the certain authorities are like prone to leakages, that itself can lead to a different business model. I mean, it's very surprising. I was quite surprised to know that this entire model is because of one single issue. Now they have come up, the government has realized this, and they are saying that nobody would share the data, would publish the data, would reveal the data pertaining to import as well as export. And if somebody does that, he will be not only be liable for fine, but I mean penalty, but also for the imprisonment. Okay, so that's a good, very good provision, I would say, that can prevent many business entities getting themselves established outside India just for the sake of this kind of data leakages. As I was saying, the validation of certain actions, they are like in a lump sum in different chapters, not sections, full chapters. V, VA, VI, IX, you can see the list that which is in front of you. that all these chapters, any actions which are being taken, okay, they will be considered to be a valid action. So what they are trying to do, that they are trying to overcome the Canon India judgment that some actions which were like performed under that kind of provision, which was said to be invalid by the Supreme Court, they are trying to validate that. Now, maybe some couple of more amendments, like the one who is importing under the concessional rate of duties is supposed to comply with certain specific procedures. One of which they have said is like he'll have to have the IAN number, okay, and that IAN number would be required to be mentioned on every bill of entry, and also they'll be supposed to even upload maybe some periodical returns also. So they are trying to come up with those kind of additional compliance requirements, that if you want to import, say for example, normal rate of duty is 10%, and for export-oriented units it's 0%, or even for that matter DFIA holders, they can adjust against that, or certain concessions are granted. Instead of 10, it is like you can apply for 7.5% subject to certain conditions. So they say that if at all you are availing the benefit of concessional rate, first of all, you will have to have this IAN number separately taken from the customs authorities. You will have to keep reporting on every bill of entry. And then finally, you will have to upload one statement also. And certain exemptions have been withdrawn, certain rates have been increased. So there is a huge, I would say, revamping of the entire customs tariff. Okay, so those who are interested, they can look at the relevant provisions and the clauses of the bills. But this I wanted to touch base as a general for the customs. Coming to the GST law proposals proper. And the first one is, you see, the most important word in the entire GST law is ITC, input tax credit. There is one particular software. Actually, it's a database called as XCUS. And if you see, there are like now lakhs of cases in the XCUS. And if you see particularly which is the particular topic on which there are maximum number of cases, you can imagine what it could be. It was Senvet credit. This database contains the excise cases and service tax cases both. Okay, and now of course the GST cases. The maximum number of cases I had counted, roughly it was going beyond 44%. 44%, more than 44% cases was revolving around Senvet credit, and now ITC. Now the kind of commitment which was given at the stage of introduction of GST, that it will be seamless credit, and what we can see is now less and less credit. Okay, so this is the kind of, again, amendment which has happened in section 16.2. Section 16 normally deals with the input tax credit. It specifies the situations under which you can claim, what are the conditions need to be fulfilled, and typically 16.2 deals with those conditions part. Now it already had certain conditions within 16.2, okay, that like you should have actually received the goods, you should have the invoice in your hand, and you should like use it for the course or furtherance of business, and that person should have filed his return. I mean, you should also file your return being a recipient, but that person should have paid taxes. The supplier should have paid taxes to the government treasury. Okay, these were the conditions. Now they are trying to come up with one more condition. One was that ultimately, this condition is specifically that the details of input tax credit in respect of said supply communicated to such registered person under section 38 has not been restricted. First of all, it says that it will be communicated to you. That was a new condition which was introduced, that saying that the credit will not be claimed unless that person has furnished his return and the details of his furnishing details have been communicated to you. Now they say that not only that communication would be sufficient, you should also check that communication within which there will be two parts. One would say that, okay, normal credits, whether eligible, not eligible, they won't say that, but then it is normal basket. Then there will be a separate table which will be saying that these are the credits which are not eligible at all. Okay. And then there are like, again, 4 or 5 scenarios which have been given, that what would be that basis. We'll come to that when we talk about section 38. We'll talk about those different scenarios under which it will be communicated to you that for so and so reasons, these credits are not available to you. So earlier, when the law came, we started with 4 conditions, out of which also we felt that certain conditions were very, very harsh, almost impossible to fulfill, like your supplier should have paid taxes. How can I ensure? And then there was, again, some judgments which helped that, okay, it's good, it's proper, that ultimately, how can a recipient can ensure that supplier has paid taxes? We had, of course, in Maharashtra, we had judgment Mahalakshmi Cotton, Mumbai High Court, which was on a different footing. It was saying the exactly contrary. But if you see the Delhi High Court, the Delhi State VAT, similar provisions were there. Delhi High Court said nothing doing. You cannot expect a recipient to ensure that supplier has paid taxes. That was, of course, both the judgments were in the context of VAT. But recently, few months ago, the Madras High Court also held, in the case of DY Bidel, that it is very, I would say, cumbersome to ask the recipient to prove that supplier has paid taxes. And without having taken recourse to them, you cannot come and ask him to reverse your credits, his credits. So earlier 4 conditions were also difficult to fulfill. Then they added one more condition, that that person should have filed the returns of which should be communicated to you. As if that was not sufficient, they have tried to add this one more condition, whereby they are saying the communication to you, if that states that this credit is not available, you don't take. Okay. So it is up to them, first of all, to communicate or not to communicate at all. Sometimes tomorrow, if say, for example, portal has some glitches. In fact, it has got many glitches. Say, for example, something goes wrong with the portal and you are not getting your 2A to be getting generated. As per these provisions, you can't claim credit at all. Maybe fault is not yours, but since it is not communicated to you, the responsibility of which is not with you, I mean, you cannot ensure that he communicates, the portal communicates. Sometimes, say, for example, there is some glitch in the software. It sends to some people, but it is not getting communicated to another set of people. Then what will happen? Because of the glitch of the portal also, you can be penalized. You may not be allowed to claim credit. Now, this is one more thing. If for whatever reasons, and you know how this portal is working really, it's really, I would say, pathetic is the word which we can use. Say, for example, if it is communicating, but for certain errors, wrongly it states that these credits are not available. Wrongly, there is no base. But maybe for whatever bugs it is reporting, then still you will be curtailed, your ITC would be curtailed, and you will be in a difficulty to come out with more working capital. Now, section 43A, they had introduced somewhere long back in 2018, which was supposed to come into effect. And before it comes into effect, it was scrapped. And in certain provisions, you see that it was provided in the previous budget, but they came into effect only from 1st January 2022. Let's see how and when this kind of amendments come into play. So BA, we have discussed. This is the particular before amendment. How does it look like? The clause BA has been added. The details of ITC in respect of the state supply communicated to such registered person under section 38 has not been restricted. So it should not be restricted. Now there is some good provision also which has come up. Clause 99 talks about section 16.4. Now section 16.4, if you see, typically it was giving a time limit to avail ITC. Now what it used to say, if you read this, a person shall not be entitled to take credit after the due date of furnishing of return under section 39 for the month of September following the end of financial year. That means the next year ka September ka return you file, before that you must avail the credit. That was the provision. And then people, probably it seems so, that people would have raised concerns that my audit itself gets over by November. I realized that, okay, I have not claimed certain credits. You already closed the doors in the September return. So how can I take it? So they have considered that, and they have said, instead of saying that month of September or month of October, they have simply put the date. And that date is 30th day of November. That is 30 November. Okay. Now, before 30 November, you should claim. Now, you will ask me probably that which 30th November? Ultimately, that is it, say, for example, normally I file my return of October by 20th of November. 20 तारीख को फाइल होता है. तो ये 30 तारीख तक के मैं रिटर्न पेंडिंग रखूं. Should I file by 30th November? Or should I book it in my books of accounts by 30th day of November? And finally, I can report it in the November return, which is to be filed by 20th December. So effectively, is it that the time limit has been increased from 20th October to 30th November, that is by 40 days? Or is that been increased by from 20th October to 20th December? That is actually 2 months. I mean, I'll offer my opinion over here. It seems that it is taking means taking in your books of accounts. What do you do in 3B is not taking. You don't take in 3B. You are just reporting in 3B. You are just reflecting. You are furnishing the details in the return. Okay. So maybe like once you are taken in the November, you can report it by 20th of December, by when like you will be filing your 3B of November. So this is about the change in law. Cancellation of GST registration. Now you see that there's one more, I would say, stupid provision that if you don't file your GSTR1, you won't be allowed to file your 3B. If you don't file your 3B, you can't pay taxes. If you can't pay taxes, your number would be cancelled. It will be suspended. So you can't do your business. Now, can you connect this? That merely because I have not furnished my report of a particular month for my outward supplies, though I am ready to pay taxes, I am ready to comply with the entire provisions of law, but maybe for whatever reasons my accountant was not there, CA was not there, whoever, whatever, XYZ reasons could be there for not filing 1 month ka GSTR1, that itself can lead, okay, to cancellation of GST registration. Now, what were the provisions here too? That they were saying that, okay, it is not immediately in the next month we will cancel your registration. If the return for a financial year, I mean, they are talking about mainly the composite dealers, okay? They are saying that returns for the consecutive 3 periods, if they are not filed, then your registration will be cancelled. Now they are saying ultimately it will be the after this return next, I would say, 1 second. Here it's very clear. Earlier they were saying return for 3 consecutive tax periods. Now the change which you can see is in pink. The return for a financial year beyond 3 months. So for a composition dealer, anyways, there is 1 annual return only. Okay, there are no more returns. So that return, if you keep pending for more than 3 months, then your registration would be liable to be cancelled. Earlier, what they were saying, that returns for 3 consecutive tax periods. Now, tax period for a composition dealer was actually, in a way, though quarterly, rather now they have made it 6 monthly. Okay, so it was giving a period of around 1.5 years. But now they have done away with that reference to tax periods. They are saying once your year is over, due date of that is also over, and beyond due date, if 3 months are passed, we will cancel your registration. Okay. And in case of normal cases, they were saying that we won't cancel your registration immediately. as I was mentioning, that you don't file GSTR1, 3B would be not allowed, etc. That will come now. Now they are saying, earlier they were saying 6 months will be the maximum period which will be allowed. If you don't file returns for 6 months at all, then we will cancel your registration. Now they say, okay, 6 months, we are not sure whether that is enough or more or less. So we will reserve the powers to prescribe the time limit. Now it needs to be ensured that the time limit comes via rules, okay? Because it's as may be prescribed, and the word as maybe to be prescribed is mentioned, okay? Mentioned as prescribed in the rules. So now they will come up with the provision in the rules. It could be less than 6 months. It could be more than 6 months, but mostly it is likely to be less than 6 months only. So one will have to be very, very careful that returns, if they are not filed for a certain period of time, their GST registration can be cancelled. Again, my comments is that, first of all, the Article 19, which gives the fundamental rights to any person of India to do business anywhere in India, isn't this trying to curtail? And I'll show you that now the provisions are coming in a way. If you don't file your GSTR1, you won't be allowed to file your 3B. We'll come to that provision. And if you don't file your 3B, you can't file the subsequent 3B. Okay, if you can't file for one period, you cannot file for subsequent period. And therefore, obviously, you will be stuck by this 6 months or 12 months, whatever they put. And ultimately, your registration would get cancelled merely because you have not uploaded some returns. Now, this seems to be really very, very harsh and disproportionate to actual offense. And therefore, I would suggest that this needs to be challenged. This is very, very draconian provision. They're trying to infringe the fundamental rights. One may say that going to courts may not be a feasible solution always. So then in that case, you have to be very, very vigilant. You ensure that your returns go in time and you pay taxes in time. Otherwise, there's a really big trouble. For furnishing the details of credit note also, earlier the word was due date of furnishing of September return. Now they are trying to say that instead of September return, you can take it till 30th day of November. So here also the same way what we discuss about the ITC. And of course, this 30th November will be further be limited by the actual date of filing of annual return. So if you end up file your annual return by 30th October, take an example, then your time limit is over. Even though this law provides 30th November, but since you have filed your annual return on 30th October, that is the date where you have concluded with the time limit. Now, again, there is like one more clause, which is saying that even to furnish your 37.1 return statement, 37.1 is your GSTR1. Even for uploading your GSTR1, there could be certain conditions and restrictions. Now, just to upload your GSTR1, it's very strange to know that even to report, to let the government know that this is the kind of invoices which I have raised, this is the amount of supply which I have made, this is the amount of liability. For that also, they will put certain conditions and restrictions. And one of which is that if you have not filed your previous month ka GSTR1, you don't file GSTR1 of this month. Okay. And if you're not filed for this month, obviously you don't file for the next month. So you are stuck. Unless you come up with that pending return, you won't be allowed further. Again, if that is the only restriction, that is fine. But if they come up with another stupid set of conditions or restriction, then again, the entire thing would be very, very drastic. And I think it is the most cumbersome than even earlier central excise law. Because I had the experience of practicing under central excise law also, maybe from 99 to 2017. And we had never such kind of provisions that if you don't file ER1 of the one period, you cannot file ER1 of the next period. Nothing of that sort. And at the most, you can like even intimate also. For rectification also, there was no time limit. Now, this is, I think, instead of like really coming up with the new age law, they are going back to the age old, the probably even British era, prior to the British era, maybe the Mughal time. So, though they are saying that intention is to curb the tax evaders, etc., etc., but what you can do with the GSTR 1, you're simply uploading your statement of supplies. So they say that there will be a lot of conditions and restrictions. Now it has to be seen that what are those conditions and restrictions. Time limit for rectification of errors in GSTR 1. If you have furnished certain details in GSTR 1, okay, then like there were like earlier connection with 42 or 43. Since now the entire, first of all, the mechanism of matching, mismatching, etc., that GST portal will do a lot of job for you. All those, I would say, sexually thoughts have now wiped away. It is no more going to work. So they are going to remove the 42, 43. They are revamping, in fact, 42, 43, and they have removed the reference to 42, 43. Now they are saying that if whatever you want to rectify, again, you can rectify till the date of 30th day of November. Now this also, as I said, that in the excise era also, if you come up with any error, maybe 5 years or 4 years later, after 5 years, so obviously, since department cannot come back, so you are not a fool to go and tell them that I have done some errors. But say up to 5 years also, if you come to know on your own, certain errors have happened, you can simply communicate to the officer and tell them that I have paid duties, I have also paid the interest, and there were legal provisions in the law under 11A that they cannot even issue SOCOS notice. There won't be any further questions asked. The chapter is closed altogether. Whereas if you see in this case, that even if I want to pay more taxes, if I want to amend GSTR 1 that I have forgotten to report certain bills, beyond certain period I cannot amend. Now, of course, the good thing is that earlier it was due date of furnishing September return. Now they are extended to 30th November. But I would say that that's not even required. SSC can communicate to the department anytime, anyways. Sequential filing of GSTR 1, which I told you that if you don't file GSTR 1 of this month, you won't be allowed to file for the subsequent months. So until like you take care of all the pending returns, I mean, even if one return is pending, you won't be able to file the subsequent returns. Date has to be notified by the central government. Now this is section 38, which I was mentioning about. The details would be furnished to you, and those details will let you know that whether there is some ITC which can be restricted, okay, and those restrictions can be prescribed on basis this 4 situations. Now, if you see the first situation, that it can say that by any registered person within such period of taking registration as may be prescribed. I'm not sure, Parin bhai, do we want to take this up in a webinar mode or the group discussion mode? Because I'm going one way.
Anything is comfortable. We will leave it on.
Okay, fine. So we'll first of all finish with these slides, and then I think meanwhile you can jot down your questions, and then we can discuss the particular scenarios.
Sure. And so what we do is generally we unmute the participants and they can ask directly the questions.
Okay. So sorry, I could not get that. So we'll keep it at the end, questions?
Yes, we can keep it at the end. So we will unmute the participants and they can ask the questions directly.
Okay, fine. Got it. Thanks. So let me finish with this slides and then like we can take up all the questions. First of all, they can tell that, okay, you cannot claim the credit because that person has taken registration just now still this 3 months period is not over, maybe 6 month period is not over, he is under our observation, and only once we let you know that his 12 months are over, of course they have not prescribed the period, they will say that such period as may be prescribed. So again, we'll have to look at the rules, what they are prescribing. And sometimes I would say instead of prescribing through rules, they end up prescribing through notification, which is again illegal action. It has to be through rules only. So they will come up with the period within which you are not you allowed to avail the ITC. So if he has taken registration, he will the portal will let you know that for a period of this 3 months, 6 months, 12 months, 24 months, maybe whatever, 20 years, you won't be allowed to claim ITC. So that period is left to them. By any registered person who has defaulted in payment of tax and where such default has continued for such period as may be prescribed. Again, they don't know that what is to be told as of now to you by way of act. So they will think, maybe then they will keep on changing also, that what could be that period for which if somebody has defaulted in payment of taxes, whether that is 1 second or 1 year or 20 years, that they will let you know that for this period, if he has not paid taxes and if he has defaulted, then you are not permitted to claim ITC. Okay. Then third, by any registered person, the output tax payable by whom in accordance with the statement of output supplies furnished by him under the said subsection during such period as may be prescribed exceeds the output tax paid by him during the said period by such limit as may be prescribed. Again, as may be prescribed, as may be prescribed. So what does this mean simply in English? That in GSTR1, he has reported a liability of 10 lakhs. He has filed his 3B through which he has paid taxes. And instead of 10 lakhs, he has paid 8 lakhs. So then they will say, okay, then you are not permitted to claim ITC. And that too for such period as may be prescribed. Or they will say that, okay, that balance 2 lakhs rupees, we will grant him some limit. Within 1 month, if he pays up, then it is still fine. But even after 1 month, if he has not paid that balance 2 lakhs rupees, then your credit would be not allowed. Now, again, this could lead to various issues or whatever, but then this is how the law has been drafted. By any registered person who during such period as may be prescribed has availed credit of input tax credit of an amount that exceeds the credit that can be availed by him in accordance with the clause A by such limit as may be prescribed. Now, first of all that GSTR 1, 2, 3, all those, I would say, air castles have collapsed. Then they were supposed to come up with simplified returns, okay? And they had that Saral and whatnot, different kinds of returns, which automatically would do certain things. It will be auto-populated and all that stuff. Again, that second concept also never seen the day of light of the day. Now they are coming up with a situation that they will let you know that that person's ITC is in excess of what he is entitled. Now, how would they make out? Again, God knows. How would they come to know that the claim of ITC which that person is making is beyond a particular period? Okay, and they are trying to connect with even your ITC, that you cannot claim that ITC. Again, how will that be reported? How they will identify that whether that person has claimed excess ITC or not is a big question. And mostly it seems that this clause 4 is never likely to see its light of day. It's not going to be. Then there's like 2 more things. By any registered person who has defaulted in discharging his tax liability in accordance with the provisions of section 49(12), subject to such conditions and restrictions as may be prescribed. Now again, like we'll come to that 49(12) also, but then if he has failed to pay this tax liability, again, there could be a lot of issues. I mean, you won't be allowed to claim credit. As if this is not sufficient, and as if that as may be prescribed is not over, that list, they said by such other class of persons as may be prescribed. So if I say that, okay, the person starting with letter J, okay, credits in respect of those persons should not be taken. Any persons staying in a Mumbai, if they are supplying to you, you cannot claim the credit. Or any persons who is supplying the chartered accountant services, okay, auditing services, you should not claim the credit. It could be anything by such other class of persons as may be prescribed. See the kind of, I would say, vagueness or kind of the liberty they have tried to draw from the law. I think it is the most misguided budget, I would say, totally, by an inefficient class of bureaucrats that they have. It seems it's not drafted by any politicians or any knowledgeable or a person with a fair mind. It is being drafted by some inefficient bureaucrat who doesn't want to take any honors. He doesn't even know what he wants. And still he wants to simply take powers so that he can use the way he wants on a later date. I am sure, I think, let this be whatever, even if it goes public, it doesn't make a difference. Ultimately, I would say it's a CBIC to be blamed for this kind of suggestions. Otherwise, it's not going to be suggested by any sound professional that you take very vague powers, immense powers, that you define the time limit, you define the class of persons, you define the amount also. It's something not really workable. This is all about this 138. What I've done is, in fact, if you see, I've just taken this, first of all, clause of the finance bill, then I would try to compare these situations, pre-amendment, post-amendment, and then I would try to summarize somewhere that what does it carry. If you see this last side, will have the impact and the date of effect, etc. It's a summarized slide. So coming to 104. So for non-resident persons, actually the return which was supposed to be filed was within 20 days. Now they would reduce the time limit from 20 days to 13 days. For 7 days, I don't know why they have reduced the time limit, but for non-resident persons, they have reduced the time limit to file the returns. Now, section 41, they are trying to revamp altogether, because earlier 41, 42, which was supposed to be introduced, they never came. Now they are trying to the entire 41, whereby they are saying that every registered person shall subject to such conditions and restrictions. Hello?
Sorry, Jayesh. Yeah, I think
Okay.
someone was unmuted.
Okay. So every registered person shall subject to such conditions and restrictions as may be prescribed, be entitled to avail credit of eligible credit input tax, eligible input tax as self-assets in his return, and such amount shall be credited to his electronic credit ledger. Now, if you compare with the earlier 41, I'll just show you there was a mention of provisional credit. Okay, if you see, this is the before amendment. They say that the credit could be taken on a provisional basis. Now what they are saying, it will be taken on a self-assessed basis, self-assessment. So you decide that how much do you want to take, and simply basis on that, you avail the credit. Then they say the credit of input tax credit availed by registered person under subsection 1, that is based on self-assessment. In respect of such supplies of goods or services, the tax payable whereon has not been paid by the supplier shall be reversed along with the applicable interest. Now, on one hand, in section 16, you are putting a condition that your supplier should have paid taxes. Then only you claim the credit. That power is there. That provision is there. Now, as we discussed, there were like series of judgments that how can you compel the recipient to ensure that the supplier has paid taxes. So to overcome those judgments, they have made this provision that they say, we are not saying, no, you don't claim at all. We are only telling you that if he has not paid taxes, you reverse your credit. And then by way of proviso, they are saying that whenever that person makes payment, you reavail the credit. There's no problem. We are not denying that you can't claim credit at all. But at the first place, if he is not paying taxes, you simply pay, and that too along with interest. Now, of course, his non-payment is not my fault. Still, I am liable to pay interest. That is first point. Secondly, whenever he will make the payment, of course, he will pay along with the interest because he has made payment belatedly. So you will charge interest from him. Now, when you are saying by this way of proviso, what does this proviso say? Provided that where the said supplier makes payment of the tax payable in respect of the aforesaid supplies, the said registered person may reavail the amount of credit reversed by him in such manner as may be prescribed. So you can reavail the credit, but what about the interest? Interest, they are silent. Okay, so they will collect interest from you, they will collect interest from them, and when it comes to reavailment, you simply claim the credit, you forget the interest. So this again is in a way to overcome the effect of DY Bidel or maybe the Arise India or whichever judgments on Quest, or there were like a series of judgments from Delhi High Court. So all those judgments are tried to be overridden, overruled by this kind of amendments. Clause 107, they are saying that 47(1) also will be amended. I'll just take you to 47. They say that late fees would be payable. Okay, it's a small amendment that normally if you are filing your returns belatedly, then you will be liable to pay a penalty of whatever 100 rupees per day and then maximum of 5,000 rupees, and so about the SGST. So it's effectively 200 and the maximum cap is 10,000 rupees. Now they are saying that it's not only because now the 38, there is no inward return. You are not supposed to file the credit claims, etc. You are only supposed to file the outward return, GSTR 1, and simply then thereafter it's a statement, sorry, not return. The statement which is under 37, which is GSTR 1. And on input claim, you are not supposed to file any kind of statement. Simply you are supposed to file the return under section 39. They say that, first of all, reference to that ITC return has been, statement has been done away with. Secondly, the TCS return, for which there was no penalty previously, they have prescribed the late fees. That for tax collection at source, if you are not uploaded your statement, you'll be liable to a late fee of 200 rupees per day, maximum 10,000. Then this is again, I would say, a big change. Earlier, portal was prescribed to furnish your details pertaining to outward supplies or maybe Agdimex, ITC, etc. Only couple of purposes were prescribed. That for that purpose, the GSTN portal would be considered to be a common portal. Okay. Now they have said that for all different actions, this portal would be considered to be common portal. Okay, this is like one more. This is another change. Sorry. I'll come to that point also, which is about the common portal. This is, sorry, 109th clause. So this says that normally, if you have got the same pen, but then for different states, you are supposed to take separate registration. And sometimes voluntarily within a state also, if you have got different premises, now the concept of different verticals has gone. If you've got different premises, then you can take separate registration if you wish so. Now say, take an example that in a particular state like Maharashtra, you have got a liability of 1 lakh, but by mistake you have paid in electronic cash ledger 10 lakhs rupees. And in the state of Gujarat, you have got a liability of 10 lakhs, But in your cash ledger, you have only got 1 lakh rupees. Presuming there is no ITC, there is no electronic credit ledger balance. Anyways, it's tough to get, as you all just seen, that how difficult is it to get the balance in electronic credit ledger. Presuming that you only have got that cash ledger balance, but the liability in one state is more, where the cash balance in the cash ledger is less, and in the other state, other way around. You are not supposed to set off because both were considered to be distinct persons. Now, some time ago, earlier, though, even if, say, for example, you have got liability in CGST and you have got balance in SGST, cash ledger, your own money, but you are not allowed to change the head from SGST to CGST, you are not allowed. Then they came up with that kind of permission that, yes, you can change. From CGST, you can bring it to SGST. From tax, you can, if you wish, you can bring it to penalty. Whatever way, within a registration, you can reshuffle. Now they have provided, which is a good thing, that, okay, even for your distinct person registration, that means like your PAN number is same, but you have got some another state car registration or another registration within the same state, you can reshuffle the balances between these different registrations. Okay, so that that is permissible. Only they have provided one condition, which is at the last, provided that no such transfer shall be allowed if that person has got some unpaid liability. So if you have got some unpaid liability, then you have to pay that liability first in this registration, and then balance you can take it forward to another registration. Now, what is important is, what is this unpaid liability could be a big question. Is it something where, like, the portal, on portal some demand has been raised and you are not yet filed any appeal against that? Okay, that time period is still there. Can it be said to be unpaid liability, or only after the expiry of the time period to file the appeal, then only this can take color of unpaid liability? All these questions, probably in the times to come, we will have to identify and explore answers to them. So this is like one important and good change, I would say. Then they are saying that even they can prescribe the condition to utilize the maximum portion of credit ledger. So after passing through all hurdles of section 16, all hurdles of section 38, even if you have come to a particular credit, electronic credit, ITC, which is very much eligible to, which is unrestricted, it is allowed to you, still government will have one more power with them, reserved with them, that they can let you know that, okay, you have got 1 crore ka ITC, you have got a liability of 2 crores, but we restrict that you can utilize ITC only to the extent of 10%, not more than that. So even though you have got 1 crore ka eligibility ITC in your credit ledger, still you can claim only up to 10 lakhs. Now, of course, as of now, the rule 86B, it prescribes only 1% to be paid through cash ledger. Balance 99% you can pay through electronic credit ledger. But they can change this ratio anytime. They can say vice versa. You pay 1% out of the credit ledger, balance 99% you pay through cash ledger. So see the kind of powers they are trying to say, which will be reserved with them, and all these things will be as may be prescribed. So law is not relevant. What will be relevant more is now rules. The important change which I was trying to say, I think it is coming at the end, pertaining to portal. If that doesn't come, I'll discuss verbally. So this is pertaining to your interest, where the input tax credit has been wrongly availed and utilized, the registered person shall pay interest on such credit. Wrongly availed and utilized. Now, if you see the prior to amendment, okay, this is like the first para is pertaining to the before amendment, and the later one is last. This is after proposed amendment. What does this say before amendment? The current provision: a taxable person who makes an undue or excess claim of input tax credit. Okay, it says undue or excess claim of input tax credit. He shall pay interest on such undue or excess claim or on such undue or excess reduction, okay, then he will pay interest at the rate of 24%. Now, first of all, that 24% by way of amendment in the notification, they have reduced it to 18%. That is the first good amendment. They have reduced the rate of interest, and that is also with retrospective effect. Secondly, they have also said that this rate of interest would be applicable only if you are availed and utilized your credit. So simply because you have made an undue claim or excess claim, that won't make you liable to pay interest. Only if you are, after making that claim, if you have utilized that for the payment of taxes, then only this interest would come into play. Otherwise, this won't get into effect. So this is one welcome amendment. Again, for making certain amendment in the TCS, you have been given some extended period of time. Instead of due date of September, it will be 30th day of November. Okay. Refund of excess tax which you paid in cash ledger. If you are paid, say for example, you're supposed to pay 10 lakhs, but by mistake you paid 11 lakh rupees, and that 1 lakh rupees is lying as such. So earlier that provided that you can claim that amount back by filing your return GSTR 3. Okay. Now GSTR 3 never came, through which you can make claim of this refund of 1 lakh paid extra, presuming that you have got a lot of ITC accumulated. So you did not pay through cash ledger, you are paid in excess. Now they have provided that you can furnish, instead of return, you can file a form, okay, and it is connected to 50 also, and then probably it will, like, the form would be RFD 01 most likely. Okay. So through that form, one can claim the refund of excess amount paid. So for the, like, this is again a small change for United Nations agencies and all different people. Earlier they were supposed to file refund claim whatever taxes they paid. So say for example, there is a foreign embassy who is purchasing certain goods or services, and if they are paying certain GST on that, they are eligible to claim refund. The earlier period for them was only 6 months. For all other cases, the normally time limit to claim refund was 2 years. Now they have extended that period of 2 years even to them, all these foreign agencies and embassies, etc. United Nations. This I was saying, like, if say for example, if you're paying certain taxes, at the same time you are eligible to claim certain refunds. Now there was a provision that if you have filed some refund pertaining to your accumulated ITC, if that you are claiming, and if you have got some unpaid liabilities or there are some pending demands, then the officer was entitled to withhold and even appropriate your refund, which was on ITC, towards that unpaid liability. Now this refund of ITC, they have now widened that any sort of refund, whatever is there, if there is some refund which is coming to you, maybe your excess cash ledger, or maybe payment of taxes which you have paid on your exports, whatever it could be, ultimately any refund which is due to you can be withheld now if there is some unpaid liability. So they have widened their powers to withhold the refunds. Time limit to claim refund for SEZ supplies. Earlier there was no time limit prescribed, so it was creating confusion. Now they have come up with a clear provision that would be counted from the date of due date of furnishing the return. That is your 3B. So from 3B, the time limit of 2 years will be counted. So this common portal, this I was mentioning when we were discussing about that cash ledger ka shifting. The common portal was earlier specified for only two activities. Okay, one was which furnishing of your returns, and another was like your ITC. Now they have said that it will be common portal, GSTN portal will be called, used for as a common portal for all functions under the GST law. Now, what is the implication of that? How does it make any difference? Now, if you see the mode of serving you SOCOS notice, if you see the provisions of the law, normally, if you see all the previous judgments, unless the SOCOS notice has been served on you in a proper way, if that service is not proper, you can very well say that I have not received SOCOS notice at all. And therefore, there is a violation of principles of natural justice, and therefore, that should be dropped down. And maybe by the time it reaches to the court, etc., they would have lost the time period of 5 years also to reissue the SOCOS notice. So merely, if you were able to argue that this notice which the department is contesting was never served upon me, or the order which which I am appealing against was not served upon me, I could have asked for the additional time also, condonation of delay. Now, in this particular law, they have provided that this notice can be valid if they are simply posted over portal. So there is some SOCOS notice asking you to explain your reasons why a demand of 1,000 crores of GST should not be levied upon you. Simply on some corner of GST portal, it has been pasted. They say that within 15 days, you are supposed to reply. Now, normally, having filed your 3B, you normally don't visit to portal quite often. You don't like, it's not so like WhatsApp or I would say Facebook or Instagram that you would love to visit GSTN portal quite often. So having filed the return, 3B, you never look at that. 15 days are already over. That person said that like nobody turned up. They don't like to avail the opportunity, and therefore I'm passing the expiry order. 1,000 crore liability confirmed. Now, you cannot claim, you cannot take an argument that this SOCOS notice was never served upon me, no proper opportunity was granted to me. They say common portal is also a sufficient kind of place where we can put up this SOCOS notices. Okay, it is your duty to keep checking that portal every day. Whether you check your mailbox or not, it's irrelevant. You need to check your common portal. Now, friends, as we were discussing, this common portal was common portal. The GSTN portal was common portal only for two situations. So even though there was a provision in law that if something posted over common portal, one could have very well argued that, see, your GSTN portal is common portal for only two activities, not for posting or serving SOCOS notices. Now they have said that this GSTN portal would be considered to be a common portal for all purposes, and therefore now you can't take that argument that I have not seen my common portal and therefore I am not aware. It is your duty to keep checking your portal. Okay. And the effective date of this amendment is not 1st July 2017, mind well. This is from 22nd June 2017, even before the introduction of the GST law, implementation of GST law.
It's okay. Okay.
So that's 22nd June 2017, with effect from which this GSTN portal would be considered to be a common portal for all purposes. So any SOCOS notice which is served over that portal also would be considered as a valid notice, valid service. There's some fishmeal related thing which are like retrospectively amended from 1st July to 30th September. And the grant of alcoholic liquor license is declared as neither supply of goods or supply of service. So that it's considered to be not a supply at all. However, if you have paid some taxes, simply forget it. Nothing would be available to you. Okay. So this was all about today's session. we can talk about now the relevant questions if we have got any questions. It's we have got adequate time, I think 20-25 minutes to discuss.
Yes, participants can unmute and ask the questions.
Jayesh bhai, I think we have received one question in the chat box. It's from Bharat bhai. Bharat Nagada. He's asking if ITC is availed, which is not reflecting 2A to B, and now we are paying through DRC3, whether interest is payable if we have continuous credit in credit ledger. I think this is not related to the amendment, but still we can take up this question.
No, so I appreciate his question that what he's trying to say that I have got adequate balance in my credit ledger. Okay. And I was probably liable to pay something. This amendment has already come into play even in the previous budget, that only if something is paid through cash ledger, then only the interest is applicable. If you are paying through something as a credit ledger, then that is not subjected to interest. And if you overclaim your ITC, which you are reversing now, or maybe paying because you will add to the output liability. Actually, reversal, though it's not there at all. Not possible in the 3B. You will have to show that as an outward liability. So if you are paying for that excess ITC, again, I would say this amendment, once it comes into play, it will retrospectively take care of all these scenarios, and one may not be liable to pay interest.
One question I have is with regards to section 38. Now, section 38 puts one restriction, the amendment, which specifically puts one restriction with regards to you won't be allowed to take credit if the supplier has not paid any tax. Now, the question is now, since the portal has become so strict in the form that, like, if I don't file my GSTR 1 and I don't file my GSTR 3B, I cannot file my subsequent GSTR 1. Also, the GST, once I file my GSTR 1, then only my 3B window will be open, right? And until and unless I don't file my 3B, the next month's GSTR 1 won't open. So is this amendment actually applicable? How is the department going to make it effective? Like nowadays, even when you make the when you're filing the GSTR 3B returns, it even shows in case if the ITC availed is more than 10%, or if the outward liability shown in GSTR 3B is less than 10%, the difference between outward liability in 3B and 1 is more than 10%, then the department even have the power to suspend the registrations. So how is this amendment going to take place? Like,
yeah, that's precisely, Mehul bhai, it's being questioned, which is raised by not only you, but I would say multiple tax professionals. That first of all, आपका GSTR 1, 2, 3 का तो कोई ठिकाना है नहीं. How are you going to keep track of all these things? That whether that person has paid taxes or not, whether that person has claimed credit in an adequate proportion or not. So all these questions are really a big question mark. As of now, I would say GSTN portal has not delivered up to the expectations. So in the times to come, though they have made them provision, I don't know whether they have discussed this with GSTN or not. Really, time will only tell. As I told, that section 43AA or the common, the simplified return scheme, etc., many things were proposed and they never came up at all. Okay. Even after seeing the failure of portal, still there were like certain commitments which were given. A lot of deliberate, I would say elaborate discussions, deliberations had happened. In spite of that, nothing came up. So let's see how these things will take shape in future.
just one more thing, what I wanted to ask is, as I recollect, somewhere in the GST Council meeting, they had agreed upon to reduce the late fees in certain returns, having, I think probably the companies having turnovers less than 5 crores, it should be restricted to 2,000 rupees or something. It should not be 10,000 or something. I recollect that was one decision which has taken place in GST and Council, but I don't think there has been a subsequent amendment with regards to same in.
Okay, so for certain period of time, they had come up with those waiver. Okay,
Yeah.
They had come up with waivers at the initial phases of GST implementation, and they came up with more than one times also. The pity thing was that those who paid already, for them there was no refund. Okay, so those were like delayed by even belated period after the announcement was there. then they were entitled to claim benefit. But otherwise, those who already paid higher late fees, they were in a way penalized. So they could not claim the refund.
That is similar to the interest portion, which has been reduced from 24% to 18%. So those who have already paid interest on excess ITC availed at 24%, now they cannot claim back the refund of that.
On that front, I would say, though the amendment which is pertaining to adding the word and, utilize as well as availed, both, that is retrospective from 1st July 2017. But then the reduction in rate of interest, that is something, a question mark. So one can claim refund, maybe for even 6%. And in my opinion, even it appears, I mean, though not very clearly coming out, but it appears that even that 24 to 18% is also retrospective.
Right.
So one can go for that 6% ka refund.
And just one more thing, that was regarding the extension of time limit for claiming ITC under section 16(4). It has been increased to 30th November. Like you said, even if you file the return in December, still you will be able to claim the ITC. Previously, they were specifically mentioning the due date as a due date of filing the return for the month of September. So since they have changed the wordings from the due date of filing the return for the month of September to 30th November, doesn't it mean that 30th November is the last date? So basically, for the return filed for the month of October, for the month of October, which is to be filed by 20th November, so that would be the last return in which we'll be able to claim ITC, and not December, like you said.
Yeah, I do appreciate the point and concern raised by you that earlier the word was due date of furnishing return of September of the next financial year. Now they are saying the 30th November of the next financial year. Okay. So that probably, I mean, in a way, it indicates that the intention is to stop it by 30th November. Now, the important thing which we need to know and to have the harmonious interpretation is that what is that 16.2 ultimately saying is to take the credit. Now, that's where the whole question comes. Where do you take the credit? Do you take in your books of accounts or you take in your 3B? If you say that, okay, I'm taking the credit in 3B, then by 30th November, you don't have any 3B. Already by 20th November, October wala 3B has gone.
Yes.
Okay. So there is no more 3B which is left after 21st October or 21st November. That is one way of looking at it. If I say that the act of taking credit is connected to the books, where I can claim for the first time is my books. So if I am putting those entries in 30th November, then the question remains of reporting. And there is no time limit of reporting. They say that like you can report at any point in time. There is no restriction on reporting. Okay, there is a time limit for taking. So I'm reporting maybe later on, maybe by way of a letter, maybe by way of a return, which is 3B, filed somewhere on 20th December, maybe 20th January, whatever. But I'm merely intimating that okay, I'll claim the credit in my books. Okay, so that's how this the interpretation.
Any more questions?
Any more questions, participants?
Chat are the thing.
Since we don't have any questions, now I request CF Pareen Gala to propose a well-deserved vote of thanks for today's session.
Yeah. Thanks, Mehul. Just one announcement. We will be having budget amendments lecture on 16th of February. Speaker will be CF Bhadresbhai Doshi, and timing will be from 5 to 8. We will roll out the link very shortly. Coming to the pleasant task of vote of thanks, always Jayesh Bhai has always given us a master stroke, and this time too also he has given us the perfect enlightenment on the amendments which have been come in the indirect taxes. particularly GST, where everyone, I would say, at least people would have any sort of or any dimension or any area query, because even looking at the budget or looking at the practicality, still the issues have not been resolved, we would like to say. So there, but Jayesh bhai has given a perfect clarity on all these things. On the last question which Mehul asked about that, uh, claiming the credit in books of accounts and then reporting, and whether we have to claim it or report it within 30th November. It was perfectly answered by Jayesh bhai. Jayesh bhai, on behalf of Dadar CP Study Circle and all the participants, we propose a well-deserved vote of thanks to you. Thank you for accepting our invitation always, and you have always been there for Dadar CP Study Circle. Thank you, Jayesh bhai.
Thank you for this opportunity, and thank you for giving me a patient hearing.
Thank you,
Thanks a
Jayesh
lot.
bhai. Jayesh bhai, would this presentation be available? Will you
Sure,
share the
I'll
presentation?
send
Sharing
it
with the
across to you.
participants?
Surely.
Thank you.
Thank you.
Thank you.
Ending this meeting. Yeah.